All right, so the major indices are all up except the one where the two names of the monster earnings are the most prevalent. Nevertheless, the market really knows that one thing is steady. The effects of unlimited money printing and the prospects of the government really has the attention of traders right now. I'm going to bring in Walser Wealth Management, Rebecca Walser. You know, Rebecca, on your podcast, Taxes and Crashes, which I love, by the way, whenever I get a chance.
Thank you.
Back in March, you pivoted to the Great Welfare Society, and the problems ultimately would cause not only for the economy but for the stock market. So I'm not sure why you knew this was happening or saw it before everyone else, but explain longer term what it means for us.
Yeah, Charles, the more that the government gets involved, the more we are disincentivized to take charge of our own personal freedom and lifetime. So when you see tax policies where people are getting automatic money just for having children under a certain age, like the refundable tax credit, or you see the Federal Reserve continuing to buy $120 billion per month to, pump up the economy. When you see these things, investors are not dumb. They know that this is not truly a fully organic economy and that there will be a price to pay down the road. So I think it's great. I agree with Keith that we do have some runway of time where we're going to have great earnings. But again, that's because we had the ARP pass last month, and we have to get more back to an organic source of the economy so that it can continue forever.
Is there ever a point when we've crossed the Rubicon and can't get back to a real organic economy? I say that because I look at states like New York, California. I'm not sure they can ever go back to a pure growth model.
You're 100% right, Charles. There is a point where government is too big, programs are too massive, tax burden is too high. It's socialism, and it leads to communism. And we know that those models are not changed through anything but maybe revolution, the ballot box. I mean, they are not changed because of economics.
What are your thoughts on what Powell said yesterday? Chairman Powell, I thought he did it really well. I really do. I think he really pressed the issue that, hey, he ain't changing course no matter what. But we're going to get this spike in inflation, and while we get it, we got to believe in our hearts and mind that it's temporary. Jim Polson already said he thinks it takes us into next year, but he's still confident in the market. Can they go hand in hand?
Charles, it's not going to end until we really get people back to spending the money. So when concerts are reopened, when boats are taking people out on the water again, when people are actually able to go and drink at a bar and not have to be outside, this is when the American economy will organically be back to its pre-corona levels, if you will. And until we get to that, they're continuing to stimulate and stimulate. So that's a problem.
I want to ask you about last night, President Biden. He had a lot of things to say, but he kept repeating one old line over and over. Take a listen.
It's time for corporate America and the wealthiest 1% of Americans to just begin to pay their fair share. Just their fair share. Sometimes I have arguments with my friends in the Democratic Party. I think you should be able to become a billionaire and a millionaire, but pay your fair share.
Now, according to the Tax Foundation, the top 1% earned 21% of the income and paid 38.5% in total taxes. So he's right. Something ain't fair about that. I mean, when it's a question of fairness, right? Wouldn't cutting taxes really ultimately on high earners and everyone else be smart and fair?
Yeah, absolutely, Charles. I mean, there is no system in the world that says because you do better, you should pay more. That's an American philosophy of marginal graduated taxes, and it actually hurts entrepreneurs and innovation. It is a wealth killer. Yeah.
I mean, it's proven. Rebecca, thank you very much. Always appreciate our conversations. And folks, I want to